Good morning everyone. I am Dr. Pradeep Soni, Assistant Professor from the Department of Business Administration. Today we are going to discuss about the introduction to accounting. First we will discuss about the origin and growth of accounting. Accounting is as old as money itself, and accounting was practiced in India 23 centuries ago, as it is clear from the book named Arthashastra, written by Kautilya, King Chandragupta's minister. The modern system of accounting, based on the principle of double entry system, owes its origin to Luca Pacioli, who first published the principle of double entry system in 1494 at Venice in Italy. The art of accounting has been practiced for the centuries, but it is only in the late 30s that the study of the subject accounting has been taken up seriously. Now we will discuss about the accounting definition. The process of identifying, measuring, recording and communicating economic information to permit informed judgment and decision by users of the information. And as per the AICPA, according to the American Institute of Certified Public Accountants, accounting is the art of recording, classifying and summarizing in as significant manner and in terms of money transactions and events which in part at least of a financial character and interpreting the results thereof. After clearing the definition of accounting, we are moving towards the process of accounting. When we talk about the process of accounting, there are few points, like first is identifying. What we will identifying those events that are considered as an evidence of economic activity relevant to the business. And the second process of accounting is, after identifying, is measuring the events. After that, recording start, keeping of a chronological diary of a measured event in an orderly and systematic manner. And the last process of accounting is communicating through the preparation and distribution of accounting reports to the interested parties. Now we will discuss the difference between the accounting and bookkeeping. There are certain bases of differences in the bookkeeping and accounting. The first is scope. Bookkeeping involves recording of various business transactions, only financial and maintenance of books of account, where accounting is beyond recording and maintaining the books of accounts. It involves analysis and interpretation of the data provided through bookkeeping, drawing conclusions therefrom, and advising the management in taking decision on the basis of the conclusions arrived at. And the second basis of the difference is stage. It is the initial stage of the recording of the business transactions, and the accounting is the next secondary stage of the recording of business transaction. The third basis of difference is objective. When we talk about the objective of the bookkeeping and accounting, where bookkeeping is maintenance of a proper record of all the business transaction in a systematic manner, and the accounting is analysis and interpretation of business transaction which a view to arriving at some meaningful conclusion and facilitating the management in taking decisions. The next is nature. Bookkeeping is a repetitive and routine and clerical natures, and the accounting is analytical, interpretational and executive nature. After that, the supervision. If you talk about the supervision basis, the bookkeeping is the job of a bookkeeper does not include supervision and checking the work of an accountant, but the accountant job includes supervision and checking of the work done by the bookkeeper. And when we talk about the staff involved in the bookkeeping, it is performed by the junior staff, and the accounting need it the senior staff or expert staff. Next is objectives of accounting. There are certain objectives of accounting. The first is maintenance of accounting record, recording financial transactions and organizing the financial data. And the second objective is ascertainment of profit and loss. by calculating the revenues and expenses and determining net income or loss. The third objective is representation of financial position. Presentation of assets and liabilities and equities of the firm, and after that showing in the financial health of the business, the overall picture, overall financial health of the business through the financial statements. And after that, the last objective of the accounting is providing information, supplying data for decision making and communicating financial performance to the stakeholders of the business. Now we will type about the types of account. We will talk about the types of account. Types of account, there are two types, personal and impersonal. Impersonal also further divided into two types, the real account and the nominal account. Concludingly, we can say that there are three types of account: the personal account, real account and the nominal account. There are some golden rules of the debit and credits. The personal account, golden rule is debit the receiver and the credit is giver. And the real account, the rule is debit what comes in and credit what goes out. And after that, the third is nominal account, and the rules for the nominal account is debited all expenses and losses and credited all income and gains. This is all about the introduction of accounting. Thank you.